Okay. All right. Hello, everyone. I'm super excited to welcome Bo Lee with Gold Star Mortgage today. We're going to spend about 15 minutes with her talking about her business. Obviously, she is in mortgage lending. I've known Bo for many years now and have a ton of respect and admiration for her. She does a fantastic job, and I'm excited to be talking to her. So, Bo, welcome. Why don't we start off by you telling us a little bit about yourself, your family, and how you got into this crazy business that you've been in now for how many years has it been now? Over 20, right?
Yep. I think this is my 21st year. Yeah. And thank you for the glowing introduction.
Sure. Tell us a little bit about yourself and how you got started.
Oh, I got started as a fluke, really. I got divorced and I had been a stay-at-home mom, and I needed to get a job, and I knew 3 people in the state of Virginia. One was my realtor, one was someone from a title company, and the other was my attorney. And I said, well, what should I do? I need to get a job, maybe something in sales. And they all said, you should get in the mortgage business. And then I did.
Wow, I did not know that.
Yeah.
Okay, very good. And tell us a little bit about your family.
So I have 2 children, and they are all grown up. And I think they turned out pretty well. I have my daughter, whose name is Emery. She lives in Manassas, and actually just bought her first home last year. And my son is a year out of college, and he's an engineer, and he lives in Salt Lake City, where he is really living the dream. So so they're both doing well. And I got a chance to see Ford, my son, this weekend, because he was in Virginia for a wedding from one of his high school friends. So that was exciting.
Nice.
Yeah.
Very good. Sounds to me like you did a fantastic job with them as well. So congratulations.
Thanks. I appreciate that.
All right. So you've been in the industry for 21 years. Obviously, there's a lot of talk right now about longevity and tenure of both realtors and lenders as far as the types of markets that they've been through. So I love to talk to people who have been through a lot of different markets and who have experienced a lot of different things, because I feel like it gives us really good perspective on the current conditions, right? Versus a professional who maybe has only been in the business for a couple of years and just really hasn't experienced a lot of change. So talk to us kind of about, what you've seen over the years, and just give us some kind of perspective, I guess, on kind of where we're at right now. I think would be helpful for people.
I think perspective is the perfect word to use, because we have been in an unusual situation for the past probably, at this point, we're going on 3 years of unusually low interest rates. So we've been quite spoiled. I think that especially for younger buyers who've never known that there were rates that didn't start with a 2, it's horribly shocking to see rates that start with a 7. But as I look back on my 21 years in the business, when I got in the business, rates were in the 7s. And the first house that I bought back in, I guess it was in like 2000. I think my rate was an ARM, and it was over 6%. It was like 6.5%. So, and I didn't think twice about buying that house, or I didn't think twice about that interest rate. I think our perspective is a little bit skewed right now, just because we have enjoyed such lovely rates for the past few years. But there was a reason for those rates, and now we are, we're having to adjust to current market conditions, and those rates are going up. And I'm sure everybody knows this, but the reason that rates are going up is because of inflation. So and what the Fed is doing is trying to slow down inflation, and that should hopefully bring mortgage rates back down. But I'm sure you probably have heard several people say this recently. Actually, people even older than me who have said, "Oh, when my parents were, when they bought their first house, rates were 16% or 18%. It's like
Mhm.
buying your house on a credit card."
Mhm.
So, and people still bought houses then. That was back in the 80s. So regardless of where interest rates are, people still do need a place to live.
Mhm.
And I think it's important to consider that home ownership is still the biggest builder of wealth for most Americans. And so regardless of where the interest rate is today, it is most likely a better move to get into your own property than it is to keep renting, even though the rate might look a little bit intimidating.
Mhm. Okay. Yeah, I would agree with that. So it sounds like you think that now is a good time to buy.
I do actually. I'm looking at all of the buyers that I've pre-approved in the past 2 years who absolutely could not get an offer accepted.
Mhm.
And now is the time. Now is their time that where it's an interesting time in the market, because I still think there are properties that I'm seeing my buyers are having to compete with other buyers. And then there are other properties who that are sitting a little bit longer, and they may not have to compete. But it's not like it was just a few short months ago at the beginning of this year, where you might have to compete with 16 or 20 other buyers. And the price of that home, I'm sure you've seen some crazy things, but
Mhm.
I mean, I've seen the prices on the home be inflated over $100,000 over the list price. And I think one thing that buyers that are looking right now can console themselves with is that if you bought a house for 100 or 200,000 more than what the list price, and if you were lucky enough that it appraised or to at that or even close to that, that's still quite a large mortgage you have there. And at this point, you're not having to inflate the purchase price as much. Your mortgage isn't going to be as high as it might have been if you were competing on the same property or similar property earlier in the year. There's nothing that we can do about the size of your mortgage. Once you take out a mortgage, that's how much money you owe.
Mhm.
But there are things that you can do once you take out a loan about refinancing and getting a lower rate in the future. So we can't help you owe less, but we can, when rates come down, help you refinance and get a lower interest rate, which would lower the monthly payment. So I think it's important to keep that in mind for buyers who are like, oh, I missed it. I can't buy now because rates are too high. I think the industry in general and the people in the industry way smarter than me, the analysts and the economists, all think that rates will be lower next year. Nobody has a crystal ball, but that is the general perception. And so there will be hopefully in the near future an opportunity for these buyers who are buying now, getting in with prices that are decent at a rate they may not be crazy about, hopefully to refinance next year and bring that monthly payment down to where it's a little more comfortable.
Knowing that you don't have a crystal ball, do you think that we will see double-digit rates? Because there are some people who are saying that, and it's really hard to know who to look to, right? Today I saw a CNN headline that said next year they're going to be in the fives in 2023.
I saw that as well. Yeah.
Yeah. So you see that one day, and then the next day you hear talk about double digits. And I think that's where for buyers, it's really hard to have the confidence about being able to refinance. What would you say to people who are kind of in like confusion mode over all of the different varying sources of data that are out there?
I would say join the club because it is very confusing. Personally, I don't think we're going to see double digit rates unless maybe you're you might need a loan that would normally have a higher interest rate anyway. Like maybe you don't have the greatest credit, or it's an investment property, which always has a higher interest rate, or it's a niche product, maybe it's a bank statement loan or something that's not sold to Fannie and Freddie later. Those products have higher interest rates anyway, and as rates go up, their higher rates go up as well. But what we're seeing, instead of double-digit interest rates, what we're seeing are single-digit interest rates with points, because the industry thinks that rates are going to be lower next year. They don't want to originate loans at 8% or 9%, because they know, or 10%, the double digits, because they know that those are the very first loans that are going to be refinanced if rates get lower. Okay. So, and lenders really don't make money on a loan unless you hold it for a year or two. If you refinance that after a couple of months, it's not a revenue producer for lenders. So they don't want to originate loans that have extremely high interest rates. So we're not getting rates that high. We're getting rates that are uncomfortable. Like, we might be on an investment property. I quoted a rate of, I think it was 7.25 with 2 points. Well, nobody really wants to pay 2 points, but instead of having a higher interest rate that wouldn't require 2 points, our rate sheet, the highest rate there is 7.25. So, and you have to charge a certain price for loans in order to make money on them. We all have our thresholds, all the different, every lender has a threshold that you can originate at this, but you can't go quite that low. So, so we're seeing, instead of double-digit rates, we're seeing a rate we're not thrilled about, with points that will go along with it. So I personally would be surprised if we see double-digit interest rates.
Okay. And then that's where I think if you work with a good agent who can kind of tell you which properties are good candidates for a nice seller credit, because like you said, not all properties are candidates for that, right? Some properties last weekend, our listing in Vienna, we got 3 offers. There's no credit that's available on that house, but certainly on many properties, there would be a credit available. And that's where a good agent can advise the client, right? And say, okay, find out how much of a credit we need from Bo, and then we can see which house we could negotiate that on. And for some people, they're going to pick one house over another because that seller is more amenable to a $10,000 or $15,000 credit than another one, right?
Yeah, I think that's very true. And there are a lot of things that you can do with the seller credit. And I've been showing buyers, and I've actually been showing listing agents as well, the difference that a relatively small seller credit can make in a transaction. So like at a purchase price of, say, we'll take a purchase price of 600. If you were putting 20% down, you could ask for a seller credit. If you, for instance, you ask for a seller credit of $18,000, that's 3% of your $600,000. So you could ask for an $18,000 price reduction, $18,000 reduction in price on that 600. And the difference in that in a monthly payment for your buyer would be about $97, which isn't nothing, but it's not earth-shattering either. If you took that same $18,000 and instead did a buy down, what we are calling, we have a program we call the Gold Star Advantage. It's a 2-1 buy down, and it's seller paid. So if you took that same $18,000 and did a 2-1 buy down, the difference in your monthly payment in year 1 is $620.
Right.
So, right. I mean, that is substantial.
Yeah.
And in order to get that same difference in monthly payment, the seller would have to drop the price about $115,000 to get that.
Wow.
So
okay,
it's important to be creative and do the best things with the money that we're able to to get in seller subsidy. So the 2-1 buy down is hugely popular. And I do think one of the reasons why that is so popular is because we do think rates are going to be lower. And so this is sort of a stopgap measure.
Yeah.
So that the buyers that are buying right now don't necessarily feel the full pain of a 7% interest rate. They're getting something that's substantially lower in year 2 and still substantially lower in year 1, but not as low, in year 1 and still lower in year 2. But we're sort of buying time with that, with that seller subsidy, so that we can get to the point where we can refinance these borrowers into a permanently lower rate than where they are right now.
Right. And I'm telling my clients, say that the rates don't come down and refinancing isn't an option. What usually happens in your first 2 years of owning a home? Your income many times goes up. Maybe your expenses go down as far as childcare or car payments or whatever. And you get to the point where that, or what the original payment is going to be to reset to, might actually be comfortable for you. Right. And of course, you're still qualifying for that payment in the beginning. Otherwise, you can't get the loan if you don't qualify for that higher payment amount. So I couldn't agree more. I think being creative with seller credits is huge right now. And I think it's very possible on many homes, even going in higher on a price and then asking for the credit as long as the appraisal comes in, which, we still have some high comps out there from before. So as long as the appraiser is using those and the values there, you can be creative with how you ask for that credit so that the seller doesn't feel like it's hurting them as much,
Yeah, I totally agree. And we've even done that retroactively. If you have a transaction where everyone's happy and everyone's getting along and the appraisal comes in on the high side, I've had the buyer's agent go back to the seller's agent and say, hey, can we just change our numbers a little bit? Instead of buying this at 600, let's change our purchase price to 620. And then give us a seller credit, and then the buyer can use that to do a buy down. And then the other thing that I'm seeing on those properties where they're not as where it's not as easy to get a seller contribution is to do a 1% buy down. So we have a lender paid buy down, so that essentially we are subsidizing the monthly payment for 1 year by 1%. So if the rate was 7%, then the lender buy down would get your rate to 6%. Okay. And we that's a lender thing, so you don't have to ask a seller for that. That option, lender paid, is only available on conventional loans, because government loans don't allow a temporary buy down to be paid for by the lender. But this is a market where we do a lot of conventional loans, so it's highly applicable.
Right. Yeah. So it really sounds like creativity is a huge key to success right now for buyers. So working with both lenders and real estate agents who are creative and flexible and can really propose a lot of solutions for them so they can pick what works best for them. And that's really the way to be able to win in this market and get a house you love at a payment you can afford. And my gosh, to be able to go look at a house and not have to decide within the first hour whether you want it or not, to be able to have a second showing. I've been to more home inspections lately than I went to, I think, in all of the first half of 2022. So to be able to have all these inspections and do your due diligence and really be confident about your purchase, there are certain buyers where this is their market, and they just have to understand that this is such a better time for them to purchase than 6 months ago, and figure out how to handle the rate issue, because besides that, everything is really to your advantage right now as far as the conditions, wouldn't you say?
Yeah, I totally agree with that. And I have talked with some buyers who they're intimidated by the interest rate. And when I've heard people say, well, I'm gonna wait until rates go back to where they were, and that's not a realistic approach.
No. What we're telling people is they were artificial. They were artificial rates. You can't even look at it like it was real. It was like Disneyland rates.
It was
you
a
know?
fluke. Yeah.
Yeah, it was. It was a
And
fluke.
all kinds of fluky things happen because of it.
Yeah.
But obviously, I'm not an economist. I don't have a crystal ball, but I don't think that we're going to see rates in the 2s.
No.
But and I'll
No.
be thrilled if we see rates in the 5s, like CNN is predicting. But I think we have to adjust people's perception to reality instead of what it was before, and help them to see that that homeownership is still the way to go. In terms of building wealth, that is the way that most people do it.
Absolutely. It's just crazy to me. We just put a rental listing on the market in DC. Caroline on my team did, and $3,000 a month. And no, I'm not saying that it's not worth it, but
Yeah.
$3,000 a month for, I believe it's a 2-bedroom, 1-bath in DC. And we got 5 applications within the first 24 hours. It was like a bidding war for this rental. And I'm like,
Yeah.
oh my gosh, think about, what they could have purchased. So, and sometimes renting is appropriate for your circumstances, but
Yeah.
the rents are just, the rents are getting out of control, and I don't think they're going to go down anytime soon. So,
No, I would agree.
yeah. All right. Well, we are out of time, but I really appreciate you telling us your kind of predictions for the future and some really creative tools. Love some of the programs that Gold Star has come out with. And we just appreciate your partnership and how hard you work. Bo has received a bouquet of flowers, I think more than once from our team, because she has really assisted us with some, not every transaction is easy. And we just appreciate you being willing to stick through the hard ones with us, because some of them are just a huge amount of work, and we really appreciate your partnership and your attention to detail for everybody.
Well, and I appreciate your partnership as well. It really is always a pleasure to work with your team, because I know that I'm going to be working with professional people with high standards, and those are my favorite kinds of people to work with. So it's always a pleasure, and thank you so much. It's really been a lovely opportunity to spend a few minutes with you talking about business this morning.
Yes, definitely. Thank you, Bo. Have a great day. And lastly, let everybody know what's your website, or what's the best way for people to get a hold of you if they'd like to have a conversation with you.
The best way to reach me, you can reach me on my website. It's callbolee.com.
Awesome.
All of my information is there.
Yeah. And it's BO and then LEE. And of course, we'll have everything in the post as well. So thank you so much for your time. Have a great rest of the day. And I hope to talk to you soon.
Bye-bye.
All right. Bye.